Welcome to Financial Tip Tuesdays, week 3. Today we're going to talk about retirement options and a few of the different options that are available to you guys to invest in your retirement. Like I said yesterday, the best time to start planning for retirement was yesterday. And so here are a few of the plans that we're going to talk about today that are available for retirement. The IRA and 401k. Now, IRAs can either be a traditional IRA or a Roth IRA, and the difference between those two is with a traditional IRA, you get a tax deduction within the year that you contribute to that IRA. With the Roth, you do not get the tax deduction, but the amount that you put into that IRA or the Roth IRA, the growth in that account grows tax-free for the amount of time that you have the funds within that IRA. The contribution limits for both the traditional and Roth IRA are $5,500 unless you're over the age of 50. Then the maximum goes up to $6,500, and that's the catch-up limit of an extra $1,000 for those plans. So there are some limits on income, your adjusted gross income, that allows you to contribute to these plans. So you can always contribute to a traditional IRA. But whether or not you get the tax deduction depends on whether or not your income is below the thresholds, is what they call it. So if you're married filing a joint tax return, that threshold is between $101,000 and $121,000. If you are single, that threshold drops down to $63,000 and $73,000. So if you fall between those limits, you get what's called a limited deduction. For the Roth contribution, you're not able to contribute to a Roth IRA at all if your income is over $199,000 and you were married filing jointly. Along the same lines, if you're single filing and you want to contribute to a Roth IRA, you cannot make more than $135,000 of adjusted gross income. And so those are the windows that allow you to either take the tax deduction for the traditional IRA or to contribute to a Roth IRA at all. Jumping over to the 401k, our maximum contribution limit for a 401k is $18,000. There's also a catch-up amount that you can do if you're over the age of 50 of an extra $6,000. So it's pretty cool. It allows you to invest a lot more into retirement than the IRA does. There's also an option that depending on how your employer has your 401k set up, they have the ability to match 401k contributions that can make your 401k contribution all the way up to about $53,000 or a little bit more if you're doing the catch-up contribution as well. So within the 401k, you can still have a Roth or a traditional option, and like the Roth IRA, the Roth 401k grows tax-free until you're ready to take that money out in your retirement. Along with that, kind of my opinion on 401k versus IRA. 401ks do tend to be more expensive. You have a lot less flexibility for investment choices, whereas with an IRA, you're able to kind of invest it as you want. The fees are a lot less expensive depending on who you go through to set up the IRA. And so I always tend to lean towards the IRA when it comes to investing for retirement. That's completely just my opinion. It's always good to talk to a financial professional, either your CPA or your financial advisor, when it comes to setting up these retirement plans, to make sure that you get into a retirement plan that is the best vehicle for you. If you're an older individual in your late 30s, 40s, early 50s, and you own your own business, there is an option for what's called a solo 401k, which allows you to invest a lot heavier for your retirement to kind of get that retirement fund built up if you don't already have a retirement set up. So that's a good option for some people. In a nutshell, that is a few of the retirement options available to you guys as you are starting to plan for that, for retirement for your future. Like I said earlier, the best time to start planning for retirement was yesterday. You want to make sure you take advantage of that compounding interest, and so you can grow your retirement plan as much as you possibly can until you reach that retirement age and be set up for retirement. Thanks for joining us today for Financial Tips Tuesday. If you have any questions, please let me know. Again, my name is Stephen Gabrielson with SLG Advising. My email is Steven, Steven, at slgadvising.com. Please reach out with questions, concerns, comments, and if you have any other topics that you want to touch in Financial Tip Tuesdays, please let me know. Thanks, guys.